Hey guys, this is Tagene of Money Coaching Services, and today we are going to talk about home equity loans. What are home equity loans and what can you use them to do? So I am Tagene of Money Coaching Services, and I help persons with personal and business money management. So let's get into the details. Before I go into sharing my screen, hit the notification bell and subscribe. Subscribe so that you know when we are sending out more videos. We want you to learn as quickly as possible. We want you to tell us how these videos have been impacting you, and put your questions in the comments. All right, so let's get into the details. All right, so today we are going to show you, we're on ATL Automotive. So we want to use our home equity loan to purchase an $8 million Audi. So these are the pre-owned Audis that are being listed on ATL's website. But before we get into that, let me explain what is a home equity loan. All right, so we are on the NCB website. So they tell you what is a home equity loan. All right, hold on guys. So the home equity loan is a loan that allows you to use the value of your existing residential property as security for the amount you wish to borrow. This type of loan may be used for legitimate purposes, and they give examples such as debt consolidation, educational services, and the list goes on. But today we are going to use the scenario of you using a home equity loan to purchase a motor vehicle. All right. So how is the home equity determined? So the home equity is the value of the property, and if there is anything that is owing on the house, you would subtract that. And what is left is your equity. The equity is the value of the property minus anything that is owing against the property. All right. So I'm using NCB today. So here are some of the things NCB wanted to know, right? The property being used to secure the loan, maybe your own house or an investment property or a third-party owned residential property. I won't go into the fine details of that. If you need more clarification, you contact NCB to get more of that. So we're going to go down to the section that tells you the amount. So how much can you borrow and for how long? So we need to know this, or you need to know this for the demonstration. So you can get a minimum loan of 200,000 Jamaican up to a maximum of 40 million. But for this demonstration, we only need 8 million, right? And what time period will you get up to for this 8 million? So it says up to 15 years for loan amount that is equal that is equal to or greater than 2 million. So 15 years is what we're going to use for our calculation today. Some other things you will need is official valuation, land surveyor report. I'm going to put a link in the description so that you have all of this information at your fingertips. All right, so let's go. So we're going to go to the calculation. So here, I've already put your 8 million for 15 years, and the interest rate I'm going to use is 8.5%, right? So, an $8 million audit using a home equity loan can cost you $78,779 per month. Not sound bad, don't it? Nope. What is the comparison? So let me show you what it would look like if you took a regular loan. Because we have to do that comparison, right? All right, so here I'm on NCB's loan calculator, and I put in the 8 million, 14%, because the interest rate, if you're borrowing against the vehicle as the collateral, then the interest rate is higher than the interest rate that you would get with a home equity loan. So we're using 14% here, right? And the length of the loan, we're using 5 years. So we click calculate, and your monthly payment, people, look at this, $186,146.01, right? Now this is what the difference look like between the home equity loan to purchase the same vehicle and a regular car loan to purchase the vehicle. All right. I'm also going to show you what is the total amount you will pay for the $8 million vehicle using the regular way. This is 11. I'm going to make it a little bigger so you can see it better. 11 million. 11,186. I'm sorry about that, guys. I got cross-eyed. 11,168,760.60. That would be the total cost. Okay, so now we are going to go back to the home equity loan. All right, the home equity loan, we did some adjustments. So our recommendation is for you to have a win-win with this home equity loan. One, you're going to win by having a lower monthly payment to pay. So you're going to pay $79,000, rounding it off, $79,000 per month instead of $186,000 per month. That's the first win. Then, if you were easily able to afford the $186,000 per month with the regular car loan calculation, then our recommendation to you is to make some extra payment to the home equity loan. All right. So say the difference is $98,000 per month between the cost that you're gonna pay per month for the home equity loan and the 186,000 that you're gonna pay with the regular car loan is 98,000. We multiply that by 12 and we put 1,176,000. Why? This is the amount that you can use to make extra payments every December, right? When you make extra payments to your loan, it does a few things. It lowers the total cost that you pay to the bank, and it makes the payoff faster. People, it makes the payoff faster. So you win: one, lower monthly payments; two, early repayment if you put extra to it, if you put the extra payments to it; three, lower interest rate when you compare the home equity loan to a regular car loan to purchase a vehicle. So the two methods are purchasing to purchase a vehicle. But one is being secured with the home equity loan and the other one is being secured with the car. So the home equity loan wins with a lower interest rate, with a lower monthly payment, with an earlier payoff date. If you do extra payments using something similar, like the calculation that we've used, you might, however, not pay off. You're going to pay off the home equity loan faster than the 15 years. But depending on how much you use as the extra payment every December to the home equity loan, you might not pay it off sooner than the 5 years. So in this case, this one is not paid off before the 5 years. 5 years would take you to 2029. This takes you up to 2031 if you are to make just 500,000 per year every December to the home equity loan. Right? All right. The other win that you get with this home equity loan is you can ask your bank if you can put the cost of the insurance for the motor vehicle as a part of the home equity loan figure. So do your homework on that. I'm not going to go into much detail with that, but it is a conversation that you will need to have with your loans manager for you to compare both methods and do the calculation to see which option best suits your needs. Now, purchasing a motor vehicle, whether by home equity loan or using the car itself as the collateral, has benefits for persons who are in certain types of industry. Example, if you're a wealth manager, you upgrading your vehicle adds to your reputation as a wealth manager, as a financial advisor. So persons who purchase a motor vehicle just to show off on the neighbor, this is not for you. I'm not creating this video for you, even though it is up to you if you want to use it. But my main aim with this video is for persons who want to leverage their image by upgrading their vehicle, but do not want to pay the 186,000 per month. They would prefer to pay the 78,779 per month, and they have a mortgage or an asset that is able to allow them to use the equity to do so. Okay, so questions, put your questions in the comments. Other than, say, a motor vehicle, using the home equity for a motor vehicle, you can use the home equity to go back to school. Use the home equity loan to further your education. And this is a way for you to have a win-win situation with your having a house. So instead of you sitting down and waiting 25 years to pay off a house and just making those payments, there are other opportunities that can be had from this house. Now, these recommendations are not for persons who are very bad at managing money, because you do not want to go out of your way and buy the most expensive vehicle, max out the highest limit equity that you can get on a house just to show off on the neighbor, because you are putting yourself in deeper debt. We recommend that you use it as a leverage, use it as a tool for you to create wealth in some way, shape, or form, right? So this is the reason why we are teaching you these strategies. Put in the comments if this is the first time you have heard somebody break down how to use a home equity loan. Break down how to compare a home equity loan to another type of loan for the same, if you want to purchase the same item, right? Showing you that you can compare the two and make an informed decision as to what is the best way forward. As I said, do the math. Go and get the information from your bank that you need to do the math. Ask them to calculate. Let them calculate the home equity loan for you to buy the $8 million audit, and the regular loan if you're going to use the car loan to buy the audit. And you compare both. So this is us just giving you the scenario and giving you some figures that are possible, but they might not be exact to your experience. But what I can say is that they are very close to the actual reality. But we preach personalization. So go to your banker and let them give you a comparison between the two, right? This is us taking you out of the darkness. We took you out of the darkness for the mortgage, and now we are taking you out of the darkness to upgrade the vehicle. And who doesn't want to pay? Like for this example, a difference of $98,000 less for the same item. $98,000 less per month. people. So if you can find a way to use that $98,000 difference in the pricing, meaning how much it will cost you monthly for the home equity loan to buy the Audi for the 8 million, and how much it will cost you for the Audi if you use a regular car loan and use the vehicle as the collateral, then this is our homework for you. Because some of you are in professions that what you drive makes a difference. It impacts the client in positive or a negative way, because once you start telling them and talking in the ways of, oh, generational wealth, they are looking for clues. They are looking you from head to toe and saying, does this lady look like she know what she's talking about? Is there anything on her, how she dresses, or him, how he dresses, to indicate that he might have a clue of what he's talking about? Because unlike me, where I am able to show you a calculation to get you into understanding, when they see you on the road, you will not have this opportunity. So wealth advisors, investment bankers, all of these people, when you upgrade, this is a less stressful upgrade. But I only recommend it to persons who are good with repayment of loans. Although you can set up something where you will be able to, you can set up something to make the payment automatic, right? Because even the suggestion of making the extra payments to the mortgage, to the home equity loan, you have a lot of flexibility. And this is what I tell my clients. Money management is flexible. Persons who teach money management and you always get the same, what should I say? I don't want to say boring. Same simple, basic level advice, let me say that. It is because sometimes they are not aware of how to give you any more, right? They have not have the expertise in money management. What a lot of money coaches have been doing is teaching you from their personal experience. Now, I'm teaching you from my banking experience, 18 years of banking experience, right? So this is why my videos seem a little bit different from what you see online, and go a little deeper than what you see online. And the value that you get from the videos, it will be greater. So as I said before, person, money management is flexible. I will teach you how to have flexible mindset towards your money. But first, you have to know what you can do with your money, right? You need to know what it is that is possible. Because in order to create a plan for your future, you have to know what you have to learn the options. So say a person who wants to buy a motor vehicle, he doesn't or she doesn't know this option, and they have a house that would qualify for a scenario like this. They are not going to use this option. Why? Because they don't know. They don't know, right? They are not aware. So when persons talk about generational wealth, it is not only with you how you spend the money, but is knowing what options are available when you want to do a particular thing. Like in this case, you want to purchase a motor vehicle, you want to upgrade what you're driving so that you can leverage higher quality, not higher quality, higher spending clients. You understand? And also clients, when you go to them with a proposal for life insurance or wealth management portfolio, they see the vehicle and it influences them. Yes, this is the reality. Yes, you're going to need also to bring a positive energy to the environment and be positive, and then you being your authentic self is what I preach. Be yourself because you do not want someone accepting you as a coach, as anything in life, being anything other than yourself, right? So be yourself, be authentic. Who likes you, and they will buy from you and support you. But you need to have things in place that attract customers to you because nobody wants to go on the road hustling to say, oh, buy this, buy that. Nobody buys like that. They want to see something that they like or to hear something that they like, and then they will approach you. So this is our video today. I'm going to put the link, ATL link for the pre-owned vehicle, because that's what we're talking about, the pre-owned Audi for 8 million 2021 vehicle. How you can use, compare a regular car loan with a home equity loan and see how each calculation works in your favor. And as we say, we prefer the home equity loan version. Tell us in the comments, which version do you prefer? The regular car loan version or the home equity loan version? Tell us if this is the first time you are hearing tips like this. Tell us if we are providing value, because the reason for creating money coaching services is to educate. My main purpose is to educate the masses. Because when I was in banking, I saw a lot of persons trying to manage their money, but they are guessing and it doesn't work. Guessing, and when you get it wrong, what happens is that next month you have to try to guess another way out. So Tagene, yours truly, is taking the guesswork out of your finances. Clarity is what we provide, and clarity is what will take you from where you are now to where it is that you want to be. So I'm going to stop sharing. So this is our presentation today. Home equity loans, what are they? How do you get one? And what advantages can you get from a home equity loan? So this demonstration is a home equity loan to purchase a liability. And that liability comes in the form of a motor vehicle. So thank you for your time, guys. Have a wonderful day, and